bring on our renowned trader, our very own.
Yes, sir.
Born and bred in Ghana. Doesn't have two heads, just one. Just like you. Possible. Very good. I love that statement. It's possible. Very, very possible. So the reason why I'm saying this is so that you don't think, oh, it's fugazi, it's not real. You smell what you know. You smell is real. So yes, please. I think it's only I can use it. So before I call him on stage, I want you guys to just maybe give him a rousing applause.
Good afternoon.
Yeah, good afternoon, Emperor.
Welcome everyone.
Thank you.
I'm not sure anybody doesn't know me yet. Do I need to introduce myself again? So I'm very excited that you guys are able to make it. This is a very special session. You realize that not much of information was shared on this session from me on my socials, even not as much in the Telegram community at all, because people that are here are specially selected. You are deemed as a very serious trader. So if you're here, you must count yourself as a serious trader.
Thank you. Thank you. Emperor.
And what makes it even unique is that we all trade from practically the same platform, which is the same broker, right? So this is an Exness fully sponsored event for you guys here, and then I happen to be the guest speaker, and not just for a regular come and talk and flex type of event, right? Show your achievement or whatever. This is a pure technical session, right? This is what makes it extra serious.
Show us the way, man.
She show us the way.
Yes,
The beauty of this is that it's actually the first of its kind, right? The first of its kind. So you guys give a round of applause. And when they shared the idea with me, I was very excited because I mean, the only time people get these type of in-person relation and session with me is just when they've come to the Kojo Forex Academy. Apart from that, you're probably never going to get me speaking, trading, serious like that. So I'm excited to be here. And my purpose here is very simple. And I know that anybody here is not a beginner, right? Anybody here is an advanced trader. Anybody here can guarantee, right? By fact, has deposited more than $1,000 in the market. Do you believe that?
that's true, yeah.
So, what's your P&L looking like? Negative or positive? Why? Eat bread. Chains. Bondage. So today's conversation is going to be very interesting. I'm trying to revive. If you're here, your spirit is dead. Some people's spirits are not dead. I can't say all of you are in deep breaks. Some people are in deep blues. Where are the deep blue guys? Only two hands. So we are going to convert the deep reds into deep blues. You believe it? And why I'm very happy happy, right? Why I'm very happy, I'll tell you the truth. Most times, when we go for public sessions like this, and especially quote unquote, if it's not it's not on a motivated basis, right? It's like, okay, I'm doing a free session, I'm just reaching out to random people, not any people tied to any organization that I'm personally affiliated with. If you're sharing, you're not able to freely share everything. But the difference is that while I was dressing up at home and coming home, all I was thinking is that today I want to really pour. What I only require from you is just to take as much information as possible, and then your notepads, phones, whatever you're using to record your information, and definitely will have some time to ask very vital questions. My role here is very simple, right? I'm trying to just achieve some basic things. Number one will be how you see the markets, right? That's my first rule. And then number two would be your strict, in fact, let me add the word strict. Your strict entry criteria. I hope you can see from afar.
Yeah.
If you cannot, there are free spaces in front here. So in terms of how you see the market, right, it's very important. Most times when traders look at the market, it's like they're not able to like put any picture to it, put any direction to it. The first step in understanding the market is having a clear picture or a clear perspective to it. That's like your number one rule. You just understand the moment you open the chart, you're able to ask yourself that, what is it doing, right? Or what has it done? In fact, it's three questions. What has it done? What is it doing? And what is it likely to do? You understand what I mean? I always ask myself these three questions subconsciously. The moment I open the chart, first question I think is, what has it done? And what has it done comes from looking at the previous weeks. You know, just familiarize yourself. If it's a pair you've never traded before, just any random pair at all, you close your eyes, open, and then it's, let's say, NZD card, right? You want to just scroll a little bit further back and familiarize yourself. Okay, what has it done? If I look at this, there was a point in time it was running all the way up. Suddenly it came all the way down. Suddenly running all the way back up. And then just like trading and fast like, okay, at least you get some good perspective of what is that done. And now you ask yourself, what is it doing? And what it is doing usually will cover a particular set of range, specifically that particular trading week or a previous trading week, the most eminent trading week, right? And I realized that on my trading view chart, I had like those vertical lines. I'll tell you the truth, that was one of the biggest game changer for me in trading. Those vertical lines brought a new reality of perspective to the market for me. Because what it did, right? You know what it did? Does anybody here know what it did? I'm sure there are people here that knows what it did. What it did was that it lets me see the price action of any currency pair week by week. Does it make sense? Yeah. Week by week. So if there's a particular week that, let's say, for traders that are here that like to trade maybe one or two or three currency pairs, if they open a particular week and then they're not looking at it from that perspective, right? How they're going to see it is like this. So they will open the market and they are just seeing like this, right? And then they open a currency pair like, let's say, Euro GBP, right? And then I don't have this. All you're going to see is this. and then you're not able to really tell week on week what is really happening, right? Because you're just like trading the market just as and when things happen. But the moment you introduce that line, right, it can tell you that last 3 weeks, this is how the market traded. Last 2 weeks, this is how it traded. And then this most recent week, this is what it just did, right? So on that basis alone, you have no cause to worry if all you trade is EURGBP and there's been no reasonable opportunity. I believe that anybody here knows that when it comes to me, majority of my trading analysis is on the H4 time frame, right?
Yeah.
Now, master trading on the 1 minute, 5 minute, 15, 1 hour, and then the 4 hour. But when it comes to like looking at the market from a top-down analysis basis, top-down being able to determine the long-term direction of the market before you want to like whether day trade, scalp, whatever you want to do, then I like to look at the market mostly from the 4-hour perspective. So this line that I used to divide the chart here is on trading view, right? It's on trading view. Rick, what's the name of that? It's called monthly week break close, right? You can search for it on trading view. It's month/week break close. Once you just put that on your chart, it's just going to introduce those sessions, and it will mostly appear when you're on the 4-hour. If you're on the 15-minute, then it becomes so wide, you're able to really see it well. So on the 4-hour, it just tells you that everything that is happening there is happening week on week basis. So that's like a very good way to just get a clear perspective of how the market has been behaving. It's very, very, very important. Very, very, very important, right? Now the moment you throw that on, there's a characteristics you're going to be seeing the market occasionally fulfill. You can put so many statistics around it. There are certain weeks where, let's say the line is here like this, right? There are certain weeks where the market has hit a previous high, then that new week opens, and then all it's doing is what? It's just trading all the way down. Accra is just trading all the way down. There are certain weeks, it just what? Consolidates the whole week. There are certain weeks, it just goes all the way up. Imagine that the paper continues up. There are certain weeks, it also trades down, reach a particular level, and then what? Just reverses. And other weeks, trade up, hit a particular level, and then what? Reverses that. So you can see that all in all, while you're just like observing the price action of the market, you're going to start observing some patterns around that weekly movement. Like, okay, this week it came down and went up, the next week it came down, went up, the next week it traded straight away down, right? Now they have just randomness to it. There's no like clear picture to them. But when you understand what technical analysis is, right? You say technical analysis is using historical price action to anticipate or predict future price movement. So while you're just observing all this randomness and just like haphazard movement of this market, for you to be a successful trader, you must be able to find patterns around this randomness, right? You must be able to identify. This is what makes trading difficult. People don't take it from this chronological level that I'm explaining to you. People just, okay, they just watch some YouTube video or watch something and then they tap out some strategy. They must follow these steps and principles that I'm sharing with you. So after you just observe that, okay, this thing just comes down and just goes outside. How do I want to see this now? What are the frequent patterns or what are the frequent moves that I see it occur? And then you carve out your strict rule of what? Entry, right? Which is very important. Very strict rules of entry. Now, what makes trading also difficult is that, I had so many people asking, I'm so into algorithmic trading and whatnot and whatnot. The truth of the matter is that with how random the market is, it's extremely difficult for a retail trader's level of algo build up to be able to consistently predict the market back to back to back. Institutions have crazy funds to invest and then do so much research that revolves. Plus, they also have first-hand information, and they are constantly developing and building their algos to suit market conditions. For retail traders, when they build one thing, they expect that they should work forever. They are not considering that future market conditions will change and they have to come back and retweak it and all of that. So, truth of the matter is that it's extremely hard for you to be able to build that algo. But for anybody who has been able to do that, then they achieve immense success. Why? Because algo works like a machine. If you tell it 1 plus 1 is 2, every time it sees 1 plus 1, it recognizes as 2. Like human beings as we are, can tell the human being 1 plus 1 is 2. Next day you ask you, why is it even 2? Why is it not 3? You know? So all I'm just saying is that we like to break our own rules, right? And then the market knows that, you know, the movers of the market knows that, and then the market itself knows that, and the human nature aspect of the market knows that. It's so hard for people to be rigid to follow their rules and say, okay, for any trade that I take, I'm going to put stop loss here, I'm going to put my take profit here, I'm going to risk 2%, 3%, 5%. It's so hard. You know, some people, one trade setup, they say, okay, I'll put 1%. Then that trade makes, let's say 100 pips, right? Let's say you are following Rick FX every morning gold. Put 1%. People are following draw forward. And the next morning you say, okay, let me put 3%. Then Rick is saying 90 pips. You're like, let's say, make I go 50% problem. The day you put 50%, then negative what? 40 pips. You are beginning to question yourself, you know, and you come to his DM and insult him. But imagine that, you know, consistently you're just following that 2%, 2%, 2%, right? It means that day you lost 2. You probably just lost what? The previous, a few pips from the previous day, because obviously if you're making 100 with 90 pips and you're losing 40 pips, there's still like a lot more remaining. I don't know if you get what I mean. So you're not going to even be mad. But the human nature aspect of it does not always allow us to follow that. I don't know if you get what I'm saying. So it's very difficult. So one of the key success, you know, traits of a trader is the one that is consistently able to follow what I'm telling you. It's very important. You behave like a machine. You have to behave like a machine. That's why, like me, you get people asking, you're not dropping this trade today. What is happening? And this and that. Because, like, I've become so used to and numb to the market in the sense that when I don't find what suits me, I don't want to risk any money to it. You know, I'm not in the market to play. I'm here to make money. You know, I'm here to trade seriously, to make serious business. You know, so it's not like, okay, anything I just see is it's moving down, and I buy, it's moving up, then I sell, you know, and then tomorrow change the strategy, open this, look at this thing, all over the place. You have to follow those traits, principles, right? So based on those principles and investigation and backtesting is how I developed my trading strategy, right? Most of you have so much knowledge about it and even tweaked it to suit you. But for people that have never had that opportunity, and even those who have also had opportunity, this is also another aspect to extra more open your eyes to it in a different angle. So I put my entry criteria, right, into very simple model. While I started analyzing the market, while I started studying all the trading books, right, patterns. And there's just like so much to share about candlestick patterns. Then I read a book about moving averages. There's just so much the book is talking about moving average. I watch videos on it, listen to podcasts, audios, whatever it is, any material I can get my hands on. Then I would read on trend lines. Then I read on chart patterns. Remember, they are all dispersed information. That's just how all the previous trading books have been. I get people asking me that, would you recommend a book for me, the best trading book? And I tell them that it's hard for me to recommend that, and I'm using this scenario to explain it because the market has evolved in such a way that it's so hard for you to just like use one ammunition to attack the market scenarios all the time. You get me? It's like a soldier or military general going on the war front. They're not just going to have like a pistol. You see, they'll have a pistol, they'll have an AK, they'll have Glock, they'll have different. So at any point in time, whatever is required for them to use, then they use that. Do you relate to what I'm saying?
Yeah.
I hope you guys are not sleeping.
No. Okay.
So what I'm saying is, we've got to a point in time where, as a trader, you must broaden the scope of your perspective in the market in terms of your entries, right? If you're just limited to, okay, just that you just hit some moving average, then it crosses. So all the time when the market is just like forming some chart pattern, you don't even know because all your mind is just waiting for is that moving average. You have just some stochastic down there, you're waiting. You have some RSI down there, you're waiting. So your mind is just like stuck to some one thing, So if things are happening on a different picture, you cannot see it. So with all those information, then I'm like, okay, the person that wrote a book on trend lines says it works. And indeed, I've tested a few occasions, I see success rates in them. The person that wrote in the book about candlestick patterns says it works. And indeed, you watch the charts, you watch the candle patterns, you see them occurring. The person that wrote the book on demand and supply, support and resistance, you understand me? It says it works. And then you backtest, and indeed you're seeing results there as well. The person that introduced the Fibonacci tool says it works. And these are all individual books, voluminous books, and people have written, and you can read and read, never even finish reading. So I just said that, okay, what if I'm able to pick the most important nuggets in all of these individual books, right, and videos and whatever that I just got my hands on, and be able to build a concise, strict routine around it, which is like, okay, if I see a trend line concept related, I'll quickly program my mind to look at the market from a trend line angle. If I see the demand and supply of support and resistance action in play, I'll quickly tune my mind following that. If I see the Fibonacci principle occurring, I'll tune my mind to follow that. You understand me? And then I made it a strict entry routine. So let me just list them for you. So either I'm looking at the market from the support or resistance level, right? Now, when it comes to the aspect of support and resistance, there are so many concepts that have been built around them in today's market, right? It's the same concept that evolved into what you hear on YouTube, on Twitter, everywhere. The most used word in today's market, liquidity, right? Some people relate it to order block, right? Some people relate it to supply and demand, and so many other. They all have very similar characters, if not the same, and they all revolve around the same range in the market. And trading I always tell people that I relate trading and the strategies that we use in trading with an examiner that will tell us that you have 4 questions, all carry, let's say, 20 marks, equal marks, right? Question 1, 20 marks, question 2, 20 marks, question 3, 20 marks, question 4, 20 marks, and you're supposed to answer, let's say, just one to pass. And then question 1 is 1 plus 1. Question 2 is 4 minus 3. Question 3 is x raised to the power 2 minus 0. And question 4 is 3 plus 3. We have traders, right, who want to answer the question 3. You don't believe me? You understand what I'm saying? Yeah. We have traders who think that when it is difficult, that's when it means that, yes, it is good. Flawed perspective. Flawed. You know, it must not be so complicated before it makes sense. You know, the simple things, I was one time I said that the simple things in the market in terms of strategy wise will make you more money than even the complex things you are learning. You know, so if you have extra knowledge around these ones, that is just going to top up your perspective about this primary concept, then you are good to go. But at the end of the day, they are still speaking the same language. Then we have the number 2. I like to also infuse the trend line concept. Then number 3, let's talk about the Fibonacci. Then there's a constant, right? There's a constant. That constant, I'll come back to all these ones. That constant, which means that it's like the final thing that I have to see before I take any trade. Final thing that I have to see is the candlestick patterns, right? The candlestick patterns. So all I'm saying is that I could be watching the market, you can see all the currency pairs that I have on the right side of the chart, and then all the time I'm only following these principles here, right? Asking myself that, okay, in this week's market, I'm watching GBP USD, I'm watching GBP CAD, I'm watching GBP CHF, all the currency pairs I'm watching. I'll tell you how I broke them down. Then all I'm asking myself is that, which of the currency pair is coming close to fulfilling any of these principles? Which of them, right? And that's why it just takes me so short of a time to finish doing my analysis, because I don't even need to waste my time. You can see that, like let's say for US30, I have this horizontal ray here, right? All I'm just saying is that, okay, previously this market traded all the way up here and quickly was reversed. There must have been a reason why there was that reverse out there. You and I probably never know. It could be the stock market just going all the way down because it's an index. It could be just the market hitting an all-time high and wanting to just drop or reverse. But all I'm saying is that, okay, if we have this market back up here, what could happen? Right? If we have this market back up here, what could happen? Then that becomes what? A key setup to watch for that week. Key setup to watch for that week. Underline that. Key setup to watch for that week. It means that while I go about my day, my week, whatever I'm doing, my mind is stuck on the fact that I have US 30 performing what is happening here. I guess it mean. Yeah. Have US30 performing what is happening? Then, if it just reaches that level, right? If it just reaches that level, that is where the extra aspect of the knowledge comes in, right? Key details that you need, key details that I'll share with you. So once I have US30 at that level, right, I'm already questioning myself. What are the characteristics for me to indeed know that what this pair is going to what reverse from this region? What are the characteristics for me to know? And that characteristics is all embedded in the candlestick pattern. Every one of them is embedded in the candlestick pattern, and then we'll come to that very soon. Now, over the years, my experience and what your experience will eventually teach you is that once you inculcate the pattern that I'm going to teach you, you tend to avoid all sort of market manipulation for the most time, for the most part. I won't say absolutely, for the most part. You tend to avoid all sort of market manipulations and then waves and then taking your stock out and all the things that most of you are complaining about here. You tend to avoid it and then only come into the market when it's actually the right time, right? Now, that was enhanced by technically the candlestick patterns that I mastered, right? Mastering those candlestick patterns, I saw so many of them that, meant so many things for different traders, right? I would see, let's say, a shooting star, right? I'll explain all of those for those that don't have any idea. I'll draw them here for you. And then you speak to a trader friend, and then they are saying that, look, there has been a quick liquidity grab, so I must enter now. You get what I mean? But for me, it's just part of my entry confirmations. I'll see, what's the name? Tweezer top, right? Then somebody would call it fair value gap. I've seen the space in the region there. So at the end of the day, I just realized that for all those things that people are terming as different things, they still are gradually building my entry patterns, right? So I believe so much in them, right? And we'll come to the aspect of the belief. So what I'll do next, quickly for us, is I'll list my patterns for you. These patterns, I've been using them for God knows how many years now. And so far as nothing has changed in the market, I'll continue using them. And when I finish, I'll show you how you can just take immense advantage of the market from these patterns, not just on the strict entry criteria, right? These ones that are listed here, they are for beginner intermediate. You must follow these things so well, right? Someone is sleeping, it's just doing that. Don't miss the nugget. Wake up. The ones there, right? The strict entry rules that are listed there, they are for when you are building that character, you are building that immense discipline to continuously follow them. But once you come to understand all that I'm showing you, right? You can use it in so many ways. There are so many times I take some entry, people come at me, how did you get this, how did you get this, right? But I explained all of them to you. Sure. So let's first tackle the patterns. So I have what I call the bullish reversal signals, right? Then I have what I call the bearish reversal signals, right? Now the bullish ones are the ones that I expect to see at the bottom of the range before I expect that the market will go up, right? Let me show you. So let's say there's the previous low here, right? The market went up, and then that most immediate low becomes my support level, right? And then the market is just trading all the way down. It gets to that point, whatever price action is happening here would be inspected as part of my bullish reversals, right? And I'll list them there. And the same is for the opposite. So here's what bullish reversal. And then when the market tends to just suddenly rally all the way up, and then it gets here the most immediate. Remember that when it comes to these levels, right? Sometimes we call them our volatility ranges. Sometimes we call them our support and resistance liquidity ranges. Whatever, at any point that we are looking at it, we are looking at it from the most immediate, right? Most immediate is that if you look here onto the left side, what is the most immediate high? Is it not this one?
Yeah.
If you look here, this was the previous high before this one, right?
Yeah.
So we consider the most immediate one. If you look at the bottom one, what is the most immediate low? Is it not? The most immediate low would be this one, right?
Yes.
But the most significant one would be this one. You get it?
Yeah.
Nonetheless, when we are looking at the market coming down, right, we'll consider what it will likely do here, right, before here. You understand me? So it's always a step by step here. And I'll explain the logic around that to you guys too. So here we'll always be looking at what? Our bearish reversal signals, right? So here we have the hammer, I'll draw them. The hammer looks like this, just like a 200, right? Then we have the inverse. Inverse hammer, right? Which is the inverse of what you're seeing there. And I'll explain some rules around it for you. And number 3, we have the morning star. Morning star is a very easy part. Very easy. So normally, you have like a bearish candle, right? The market is already trading lower. Trades bearish like that. And we'll normally have either a bullish or bearish candle in the middle like that. Small one, very small one. And suddenly it has what? A bullish candle like that. So it's a 3-pattern confirmation. Very, very powerful. Right? Then we'll have, I'll show you so many examples on the chart. Then we'll have the tweezer bottom. Tweezer bottom is also a 2-pattern formation. You have a bearish candle, drop lower like that. Then instantaneously being cancelled by a bullish one like this. Bullish and golfing. So these ones, right? You must learn them, and then you must have tests to see them. You see them. So the bullish and golfing, we also have like a small bearish candle like that, and then next to it, it quickly gets engulfed. Engulfed means covering up, right? By a bullish candle. And the last one, number 6, is the doji, right? So doji is usually a very indecision candle, and then you can form in so many parts. right? People call them in so many names, but for us, we put all of them in one bucket. You'd have the one that would have a flat head and a small, just a long body like that, or just a long wig with a small body in the middle, or a wig and then a body at the bottom. They all qualify as a pages for us. And so now, the real issue is that when it comes to trading, especially with candlestick patterns, there are dozens, far more than what I've listed here, right? But as a trader, you need a concise one that you can always follow. You cannot just say you're getting all the 10,000 of candlestick patterns in the world. You just get confused. You know, people that are not able to use them in trading because they have it scattered all around. Today they are watching this Marabuzu, what names, crazy names. So I just follow these ones strict, right? I don't worry my head about whatever. And then you tend to learn that they are all closely related to the very specific ones that I've listed here. It took me so many years to be able to summarize all my patterns into just these 6 ones. Then we have that for the Exness Seminar, right? Now they are quite similar to this, but in the opposite way, right? So here, the pattern will be the same, but the name actually changes. And the name changes because of the direction you're seeing it, or because of the location you're seeing it. So this is what? The hanging man. And it will also be like that, but this time, it will normally be a bullish candle. Then, it will be a bearish candle. Then we have the shooting star, right? Which will also be like this. With a wick like that. And I'll explain something important around all these patterns too. Then number 3, we have the evening star. So that one will also have a bullish candle and a small bearish or bullish one in the middle like that. And then what? A bearish candle. Then number 4, we have what? The tweezer top, which will also have a bullish candle and quickly reverse by what? A bearish one. Then we have the bearish engulfing. We should also have a small bullish candle pushing the market up, and suddenly being engulfed by a bearish one. And the last one, which is usually the same, is also still the what? A doge, right? Which I've explained that sometimes you have ones with a small head at the top, or in the middle, or at the bottom. So these are my key entry principles, or key entry confirmations. Anytime that I want to watch the market, I make sure that I'm asking myself that, is the market fulfilling these obligations, right? Now, a very important word that is going to guide you in the world of trading, especially even relating to the candlestick patterns and even the entry criteria that are also listed there, is the word confluence, right? So if you've never heard confluence before, what it just means is that a group of, in terms of the market, a group of confirmations coming together to tell you or to give you an added advantage of where to predict or anticipate the market going. So, in terms of the candlestick patterns that I've listed there, we trade them mostly based off confluence. We trade them mostly based off confluence, especially the candlestick patterns. So what I'm just saying is that you're not going to see me watch this market come down like this, and then all I see is, let's say, a hammer, just the first hammer, then I start to buy. You get what I mean? So some people, they learn these things, they're like, okay, he said that these are his strict reversals. So then when I've seen, let me just buy. No. You know? Or you're not going to see me see the inverted hammer and then suddenly what? Buy. I want to see, right? I want to see series of these confirmations, right, occurring in the same region. Series of this. It could be 2 of this, it could be 3 of this, it could be this one plus this, or this one plus this one, you get me, mixed up in the same region. Now remember that all that we've been doing, we are doing it on the 4-hour time frame, right? If there's one thing that you're going to learn very important in the market, which has been said so many times, right? But as traders, we don't always take it extremely serious. Sometimes we take it serious, sometimes not. Is that the higher the time frame, the stronger the confirmation. It's important. You cannot do without it. The higher the time frame, the stronger. And I'll let it make sense. Remember that if you are watching this market on the 4-hour, which obviously everyone knows here, if every new candle closes and opens, it means I spent 4 hours in that region. True or false? Sure. Now, if you've done physics here, you know the meaning of inertia, and then you know you've also done all what subject to live inventory. All I'm just trying to point out is that if you are observing a continuous flow right in one direction, and suddenly there is an impediment in front of that thing, right? What do you think? That perhaps that thing may not be able to go past it, right? Yeah. You must always look at the market from that angle. You know, so let's say we are using just the one we have up there, right? We obviously do not know exactly the reason why this market rejected here or reversed here, right? But even if we're just considering why when the market reached here, right? How many hours is spent here, right? That's enough reason for you as a trader to start considering all the things that I'm telling you. Remember that every candle here is 4 hours. So this is what? 4, 8, 12, 16, 20, 24, 28, 32. You get me? A full day, the market is just like stuck in one direction. If you go and watch this if you go and watch the same perspective, right, the same concept on the 15-minute, right, 15-minute chart, it'll probably be the market spending about an hour in one region, right, or 1.5 hours, maximum 2 hours, and then doing whatever it wants to do. But now, if you're watching that on the 4-hour, it tells you exactly what is happening, that indeed there is a strong reasoning for this market to reverse, and that adds up to the confluence that we're talking about. That adds up to the confluence. So all I'm saying is that if you see one pattern, 2 or 3 in one region, you'd already think that the market has spent 4, 8, 12, 16, 20 hours in that region. You get what I mean? Because each one of them will take 4 hours, especially now that you're watching the market on the 4-hour. And for me, that's like part of that confirmations, that the moment I see the market stuck in one region, right, for that much of a long time, then indeed this market is giving me Q, right? A typical example is if we watch oil here, right? So based on what I've just shared with you, you see that what we have, this most immediate region right here as the last low, and part of our entry criteria, we said was, we are looking for either the what? Support, resistance, isn't it?
Yes.
And then, when the market should fulfill that obligation, our support resistance is the most immediate. Remember that here, right? Is the most immediate. Once the market fulfills that, our next bet of entry is complemented by what? The candlestick patterns, right? I don't compromise on these ones. I always follow them. That's why my watch list are a lot. So sometimes people say, Kojo, but if you're watching this on the 4 hour, then how many positions will I get? You know, the truth of the matter is that when your scope of perspective is a lot in terms of the currency pairs you're watching, and you're following these strict rules, right? Every week you get not less than 3 or 4 positions, and not just 3 or 4 positions giving you 5 pips, 10 pips. We're talking about 3 or 4 positions, each giving you nothing less than 100 pips. You get what I mean? Yeah. And that is where you begin to make serious money on the market. And the beautiful thing is that after all this, you can convert that same perspective to a day trading logic or scalping logic. Do you get what I mean? But first, you must master it from the swing perspective. So if I'm watching a tail like this, all I'm doing is that I'm just watching how it's playing out the whole week, right? Remember that for that particular week, it will open somewhere here, right? Now, before it will open here, previously I've been watching what will be happening here, right? And then we'll see that with this type of formation, what did we observe? The market break here, right? Which is not something we expect. The whole confirmation took form above the range. Normally, you don't want your confirmation above the range, you want it below that. So it will easily be a setup that I'll pass because it's just like, I think of it as a break, retest, and continuing and whatever it is, then it just suddenly just comes down. You are not the perfect machine in the market. You cannot think around every scenario and then get it right. That's something that you must learn to accept in the market. Most traders have not come to terms with that, understanding, accepting that not every setup is going to just make sense for them to take advantage of. Some people want to just take advantage of every tiny thing in the market. It's not realistically and humanly possible. You will definitely miss a lot. You know, so in watching this, you can see that eventually we have this market here, right? So tapping here is my first cue. Tapping here is my first cue. So first thing I'm like, okay, fine. Finally the market is here, right? I don't take any action. These are the key principles that I'm telling you. Now, there are certain things that I also do subconsciously around here, but over the years I've just taught people as well. And I think it's just important that while I'm highlighting all this, I just tell you as well. You work around the clock, right? You work around the clock with the market. You can do that. So let's say I'm watching this market, right? And I see US oil, right? This 4 hour just closed. And then I watch my time on my wrist. And it's like 6 a.m., right? I just watched this, it's 6 a.m. What does it tell you? It tells you that, okay, we didn't get any entry there. Should we just go and sleep and then wait for whatever it is? Remember, we always have confirmation on the 4 hour. What you should just know is that for you to come and see any logical perspective again to determine if you're going to enter or not in this market, then it will be after the next one. 4 hours. By that time, will be what?
10 a.m.
10 a.m. Right?
Yep.
10 a.m. I'll come. And then when I came, I just came to see this, right? I just came to see this one. Now, when it comes to the market playing around our entry zones, right? One important way of looking at it, right, is to think about it from a tug of war. I always tell people that. Do you get what I mean? You know tug of war, right? You have one people on the other side, another people on the other side, and it's like, these people are pulling this people, these people are pulling this people. So always think of this region like what? A tug of war, right? Using a candle as a basic knowledge around it. By just your pictorial view, right? By just your pictorial view in that zone, right? Who are the dominant people in that range? Is it the bulls or the bears?
The best.
Why do you say that?
Because of the size of the cell candle.
Why do you say that?
Because the size of the cell candle.
The size of the candle, you know, any other perspective? The long wick, you know, people have varied reasons, but just by sight, you'll be able to tell, right?
Yeah.
And that's the type of eye you should start building. We go to the next candle. Who are the dominant here? Bulls or bears? Bulls or bears?
Bears.
It's like some of you are not confident. You are saying a middle. That's no sure. You are saying bulls. Which one? Which one? Is it the bulls or bears?
Bears.
Straight up, right? You can tell. So are you going to buy it?
No.
Are you going to buy?
No.
Have you bought there before?
Yes.
You buy all the time. You buy. Yeah, you just say you go and you buy and go. They enter. Stop loss. You know, it's scary. It's scary. But you always have to just think about the market from this angle and ask yourself. You have to just relax, breathe in, breathe out, and ask yourself this simple question that I'm asking you. You see it for yourself, right? I'm not the one saying you see it for yourself. Who is in control here? You know you're not able to tell, right? Who is best? Will you buy or sell?
Wait. I'll wait.
You get me? It's self-explanatory.
Now I'll wait, but at first,
You buy.
Who is in control here?
The bulls.
Who is in control here? What makes you confident that it's the bulls?
one is that
Somebody said, important there. What do you say?
it has a
All
book
these
and
bars, you
then
must
that's
open your
one
eyes.
is
Not just be saying bulls, bears. You must open your eyes
by the
to
time you wait, can you
patterns, right? Must open your eyes to the pattern that we learned here, right? If you watch the last 3 candles, right, with all that I've drawn here, which one looks closer to it? You see? Morning star. You get me? There will always be evidence there. Remember that with morning star said what you see what? A bearish candle with a small bullish, it could be bullish or bearish in the middle, very small one, and then the subsequent one is what? A bullish candle, right?
Yes.
And that becomes your cue towards what to about. By that time, you've had that reference of the bulls here, the bears here, and then suddenly you're convinced, right? Remember that while you are just doing that, I forgot to update you guys with the timing, right? I think the first one was 6, the second one was 10, break the 10 on blood. 2, right?
2 p.m. right?
Then we have the fourth one, right? 6 p.m. PM. Then the last one is what? 10. So we realize that the market hit our confirmation at 6 a.m., right? But yeah, I mean, it hit our zone at 6 a.m. But it took all the way to 10 p.m. for us to be what? confident to trade it, isn't it?
Yes.
And this is the type of patience you need. When we talk about patience, not just about waiting for the trade to materialize. It's the patience to let the setup build up. I agree. Now, this is also another practical aspect, right? Very important aspect. What you want to do is that, okay, this is US oil, the pip count is a little bit different as we know it, but once you've seen this and you're convinced that you want to trade this, your entry here, right? Now, how do you even come by your entry? You want to make sure that around this time in the market, when that candle is about to close, you are not far away from it. Just stay for profit. You are very lost. You don't want to lose. You don't anticipate for profit. You rather anticipate for loss. That's the principle. You get me? You don't anticipate for profits. No accountant is going to sit there doing it and say, okay, the company is going to make $10 billion. You understand me? You anticipate for loss. That just means that you are adjusting your expectations. You get me? And it's the same with trading. If you have, let's say, $10,000, right? Which is the money that so many of you have funded before, true or false? True! Or I should do 1,000 or 5,000. Where should I do it? Okay, I'll do 5,000. I have rich traders here. True or false? I have rich traders here. So 5,000. And then you're saying that, okay, I've seen this setup, right? Next thing you might do is that, okay, if you're going to raise 5%, 2%, if it's already whatever you're going to do, it's up to you, right? But obviously, you always follow the perspective. Is that it's okay for this setup, I'm risking what, $500, right? That $500, ladies and gentlemen, remember that it's only covering this portion. I will be. That $500 is covering that portion there. As a trader, psychologically in your mind, right? Psychologically in your mind, just think of it as I come with 4,500. No, true. Teach you the tricks. Psychologically in your mind. I never traded then when I set my stop loss, I'm like, hey, it's only the consider the people you are already thinking. What's the take profit? 2,000 pips. Multiply that by 5 lots. No. You must already anticipate that. Okay, 500 is gone. You get me? And then just be psychologically okay, emotionally okay with it. I'm serious. I'm giving you like the key principle to being successful in this industry. You never want to just always anticipate. Wait, you want to share some experience? So once you are at that mindset, once you are at that frequency, trust me, you will never be bothered. True or false? Or you don't agree with me? You will never be bothered. You will never be bothered. Yes, initially your thing is like, I thought we were going to convert to sing Islam. But over time, you get used to it. You know that, your wins outweigh your losses, so it's okay when a few 1%, 2 or 3 is out of your account, at least you have what 95 more to work with, 96 or 97% more to work with. So you see this. Now it came down a little bit and put us in profit. Now, another mistake that so many people do. You know what that mistake is? What's that mistake? Okay, somebody said they add more position. He looks like somebody who does. What's that? Yeah, you can say break even. Is that what you want to say? True. You know, when the market is so in profit, I was risking $500. And I'm cover the position. Quickly cover the position. You know, but that can be dangerous. That can be dangerous. You know, who knows the danger? You know, right? You can just kill your very good trade prematurely. That's one small week reverse comes to taking them home away. They shall regret it. I watch it and like, $5,000 profit. That's how we come. So, the main thing is that you want to take your time, right? At least, if we see a position like this, right? This one is fair enough, you know, at least reasonably away from our entry. You get what I mean? Most times what I tell people is that I will put my stop loss to break even when the amount of pips I was risking comes into equal profit. You get what I mean? So if my stop loss in pips was, let's say, $500, which is converting to, let's say, 40 pips, right? When the market just start running in profit of what? 40 pips, right? Then I put my stop loss at what? Break even. You get what I mean? Because it will be psychologically painful to see that, yeah, you just ended the trade, it has huge potential, right? Probably expecting the trade to materialize to $3,000 profit, $4,000. But starting, you're seeing $500 profit, and you're happy. You know, everybody is excited about blue, true or false? Even if it's $1 blue, your eye that's the color I'm looking for, which is equal to your stop loss, right? Then you just watch it become a stop loss. Then you're not doing well. I don't know if you get what I mean. If I see, let's say, $100 profit, right, on a trade that I was risking, let's say, $500, right, and it becomes a loss, it has not materialized reasonably enough, and it's okay, you know, it's just maybe some small bit. But if you've seen $500, which was psychologically what you were willing to give out to the market, right, become a profit. What it means is that even if you have closed the trade there, you can even raise that same $500 on another position, true or false? But now imagine watching that same $500 become a negative. That's going to affect your psychology. That will definitely affect psychology. You know? So once I see the market move up like that, before I put stop loss and break even, right? And then you see the next price action come. See the next price action just to around the same range, and then we have our big profit here. Next one, then on and on, right? Now this is where trade management also comes in, right? First trade management we've done is taking, we're putting our stop loss at break even, right? Second one is just learning to take partial profits, right? It's also very important. Some traders don't do that at all. Like these practices, they are things that should just be part of your everyday, you know, operations, you know, to avoid disappointment, avoid frustration. You know, the market is just funny, and I like to also say wicked. Believe me, you know, you can see a beautiful position like this, right? Now this one, if we calculate this from this region all the way here, that's 160 pips already, right? You could wake up the next morning and this one will just become like this. True or false? It will just happen, right? I remember just about 2 days ago, what fundamental was it? I think it was CPI, right? And then I don't know if I came online to to talk about them. I don't think I came on my total TV, right? I didn't. I was treating it at home though, privately with the family, myself, Rick, and then my wife. So we analyzed the whole market, right? The fundamental came, we talk about fundamental as well. And then she said, oh, trade my account for me, just a few positions. I'm like, okay, no problem. Then I put some position on GBP, USD. And it instantly came in some huge profit, right? Then I showed it to her. What do you want to do? Like, I want to hold it to the next day. Yeah, it had good potential. But you know, I just saw a few, one or two rejection, price action, and I closed it, right? The next morning, then I went to sit by my market when she woke up and I'm like, look at your GBP USD. It had reversed back up, you know, and it happens. So imagine that you've seen a trade, you've seen a market move in your direction just because you are overly ambitious, right? It's okay to be overly ambitious, but the logic around here is that you constantly see money slip out of your hands. In trading, you get me? It's better to keep a penny and lose the rest than to lose everything. You know, so taking partial profit is important. If you're seeing a profit floating of, let's say, 900, right? $900, and then you're able to even keep, let's say, even $300 out of it, right? And then the 600 reverses. Trust me, you don't feel so bad like literally watching the whole 900 go. So imagine. Until eventually you reach a point where you have to always, right, there's also one important trick. You have to, let's say you take a position like this, right? You have to always leave that lot size that you never touch. Are you guys with me?
Yes.
Even if it's 0.1, even if it's 0.01, just leave it. And those are the things that will really show you the true power of the market. You understand me? You see, sometimes I'm able to take positions, and people ask me, how are you able to hold this? How are you able to? Because I have fulfilled all the preliminary obligations, putting stop loss at break even, taking some partials, or satisfying at least, you know, some reasonable amount around the entry, and the rest is okay. Let's just see what the market wants to do. You get what I mean? I leave trades to run, trust me. You have no idea how many weeks, months I can just leave a trade to run because I've just done all of these things. And those are the typical scenario where you see the market do something like this. You get what I mean? So imagine you even have like one lot on this or 0.5 or whatever it is, right? You've taken some partials, stop loss, break even, and then the market is just like moving in your favor. Realize that all that we did here, right, was understanding our entry criteria, right? With respect to the candle confirmation, very important, that I'm teaching you guys, very, very important. And then fulfilling it on one aspect of our entry, which is like the market coming to the support level, right? We have similar instances in the resistance as well. We have similar instances in the resistance, and then we have similar instances on the trend line as well. So I'll show you a quick example with the trend line. Last Friday, gold was just like going haywire. So let's delve a little bit into the next confluence, right? support, resistance, we looked at the relation of that with the candlestick. Let's look at the trend line, right? When it comes to the trend lines, right? For most people, they use trend lines to determine the trend in the market. But for me, it goes beyond that. The trend line is part of my strategy, right? It's part of my entry criteria. I'll explain it to you. I always tell my students that 2 points make a line, right? You're having time run against themselves, you're going fast and skipping some stuff. 2 points make a line, right? But you know what makes up a trend line? What makes up for it is when we have another point in the same direction. Let's say I put a point here and I ask you that connect this one, right? You cannot call this a trend line. Or I come and put even a point here and I say connect this one. You cannot, but the moment is in the same direction, right? Then it fulfills that obligation of what? A trend line, right? Now, when we are trading and then we are observing trend lines, as we are not observing them for just when we are trading and then we are observing trend lines, as we are not observing them for just pictorial purpose. Oh, it's just nice to draw the line. No, we are drawing them to anticipate a potential trade setup. Now, the reality is that you cannot find a trade on the second point unless you are using a different concept altogether, because the market goes up, it trades all the way down, and then it pulls up like this, right? It hits a particular level, and then it's coming down. You cannot just connect this and this and say, where will you even connect? How will you even know that it was about to reverse it, right? Then they will just connect. But at least those 2 points will give you a basis to connect and extend in anticipation that what? The third one would fulfill what? That trend line perspective and offer us an opportunity to sell. Are you guys with me? Yeah. And the same thing is for the buy, right? But the unique thing about we go deeper into this is that when we have that happening and then we have the market interact with the trend line for the first time, that first candle that interact with it, we regard it as, if it's in this instance a bearish trend line, we regard that first candle as our resistance region. Do you get me? That first candle, right? Which means that every other confirmation, which is the one that listed there, the shooting star, the angry man, we want to see it happening below that first candle, And once it happens, then we find exactly what we want to see. Of thinking from the angle that I explained to you, the tug of war. Are the bulls in control? Are the bears in control? You start seeing them when you start asking yourself those questions. Then we decide what to sell, put our stop loss above the region, and then let the market do the rest, right? So this is like the opposite version of it, right? We have the concept of the inner trend line and the outer trend line, right? When it comes to trend lines, it's based off on some key principles that we follow, right? Because now, if you're talking about a trend, I always tell my students again that the trend just means an inception point. You get me? Okay, when did this thing start? It started 2019, it started 2020. When did this trend come? So if you're watching the market too, and then you've seen a whole lot of bullish movement over the course of a period, you have to ask yourself, when did this start? And that would be your inception. So in this case, you watch here, this was where that initial bullish move for Eurocard started, right? Then if we want to consider pointing it to the most immediate second point in the market, then we'll consider this one, which will give us this point here, right, without this one. But obviously, the market is far away from this one here, right? There's nothing we can do with just this trend line unless we are waiting for it to come, which will take so many months. And that's why we also developed the inner trend line. This type of scenario will look like this, right? When you are seeing the market like this and you're asking yourself, what must I do, right? But based on this, you can just what? Pull this one here from point 1 and connect it to this very one here, most immediate 1.2, and extend it like that, right? In anticipation that what? The market will come there. But while you are doing that, what you don't forget is also the key principles that we learned. Remember that we have the last week here, right? And then we also have some level of rejections here as well. All while you must watch and ask what are the likely reactions the market will do while you're waiting for the market to fulfill that trending line of deviation. So these are like practical things that do occur in the market. You see the market coming and asking, so are you going to just reject here and then it quickly just breaks it, right? Are you going to reject there? What I'm asking is that, are we going to start seeing the market slow down there with the candle pattern, the dojis that I showed you, the hammer and all of those things, right? And if the market is not going to react there, instantly you just see, a huge candle just run through like that, just like we saw here, right? Then it comes close to this level. Already we just start the trend line, so we start investigating, right? Are the bulls stronger here or are the bears stronger here? Obviously, it's the bears that are still dominant here. Then the next candle comes. So here, you're already watching your timer, right? If it's 10 p.m. that you watch this, you know, okay, the next candle will come 2, the next candle will come 6, and then it just keeps going on and on like that, right? Then I watch this one, I'm like, okay, the bears are beginning to take some actions here, but not so confident. You can see that here we have what the doji and then inverse hammer, right? All looking like a bullish candle, right? Not so convinced to just take a trade position here. Then we have like this one, right? So you see this one. You see when I replayed it, you saw what happened, right? It will just dip down and then came above. Normally that is like that liquidity grab that people talk about, right? That final bit of a movement that will just like come back to take, people stops below. There are people that were so anxious to just take the trade before that confirmation that I'm showing you there. You get me? They were just anxious, like they just want to find it because they don't have the perspective that I've shared with you, right? You may just see them as basics, or you may just see them as random, but trust me, like they are very powerful. They don't have these perspectives, right? These perspectives let you avoid so many, errors in the market. So once you're able to just avoid all those manipulations based off from the candle confirmations, then you're able to like identify these patterns there, right? This one here comes very close to a hammer, right? So you can see that just by consistently observing these regions, right? We've seen 3 of our favorite candlestick patterns, right? Then again we repeat the same thing. Our entry here, our stop loss just right beneath the last row, which is this week here. In this case, it just allows us to reach what 20, 21 pips, right? And then we target these highs as a big profit. Then the next one just be in this region. And then we just watch the market do its own thing, right? Now we've talked about the support region, resistance. You've seen the psychology that just goes into this. You've seen currently even where we are now, right? Coming into next week, we have Eurocard here, right? The first candle penetrated. We have this doji here. We have this hangman. We have this bearish engulfing here. We want to see, right? Subsequently, how will this market react here, right? Already you can see that this one gives us a strong presence of the bears in the market, right? And if you consider this a legit setup, then we want to take our entry here, stop loss right in the range, and then target these lows here. But what I've also observed in the market is that when you have confluence so close to each other like that, then there happens to be a lot of room for manipulation. What I mean is that if you watch here, we have like this resistance region, which is already forming this, confirmation that will be enticing enough for us to enter this trade. But if you just watch just above it, right, then you have this trend line here, right? So the question that most traders will ask me is that, okay, what would you do in a scenario like this, right? The logical thing that I'll do is that when I find a situation a little bit complex or tricky like this, I reduce my position size, right? If normally I risk like, let's say, 5%, and in a position like this, I'm a little bit confused, like, take this one or will I not take this? What if you just go something? Whenever you are in doubt, just size down. You get me? Whenever you are in doubt, you know, it should be part of your routine. Whenever you have a little doubt in the market about any position, don't totally avoid it. You know, you'd have regret when you avoid it. You come back and see this thing drop. But let's say your normal lot size is, let's say 0.5, right? For this instance, put maybe 0.1 or 0.05 or whatever it is that just keeps you in the position because you trusted the setup. You get me? And it hones your skills. What it does is that it doesn't just let you miss any move and then you start feeling, what do you call that thing? Analysis paralysis. You get me? You did analysis, you didn't take the trade, and then it went down like that, right? So that's also a very important aspect in the market. Now let's touch briefly on all that we've studied here. How you can just take advantage on just random movements in the market, right? Now consider a pair like we'll talk about gold. We'll even talk about US 30 as well, right? I'll show you some. So I tell people that wicks, right? Wicks in the market, they mean a lot. You remember the aspect where we were talking about what? Demand and supply, right? Now let's consider that everything that we've studied here, it has given us a basis of our entry, which is like the support, the resistance, the trend line, the Fibonacci. If not touch on the Fibonacci, we have time to do that. But let's focus on a few tricks that I want to show you. So if you watch the market, right? Let's say a candlestick. You have a body like this, right? We have normally this, let's say a bullish candle, right? You have the open here, you have the close, right? Then you have the high, and then you have what? The low. And then it's a bearish candle. You have what? The open here, you have the close, then you have the low, and again you have the high. Now, let's say you have a candle looking like this, right? And it's a bullish candle, right? It's a bullish candle, right? Remember, the open will be here, the close will be here, right? And then there's one thing. Now, in terms of all the candle patterns that I taught you, which one is this one? Hammer, right? Good. Now, if you see a pattern like this, remember that this is a bullish candle, right? Bullish means that it was blue, considering what we have there, right? We have a small head there. The market opened here, eventually closed here. But we have this wick here. You know what it means? It means that when it opened, right, there was what? There was a sell, right? Initial sell, which would have now made this one look like a bearish candle, right? Then suddenly, start what? Pushing up, right? Buyers coming in, pushing this market up, and then suddenly closing off here. I agree. Then you get what? A beautiful pattern like this. You know what normally means, right? What it means is that the momentum of the buyers that suddenly came into the market is still existent, right? It's still existent in the trend. And what it means is that when you take a position here, let's say for a buy, right? And then you put your stop loss just reasonably, normally you can decide to put it below the wick, but it will make it a wide stop, right? Normally for this, these are like for day trading and quick trades that I'm showing you. If you decide to put your stop loss, let's say reasonably by pips, 30 pips, 40 pips below the range or below the entry, right? You are likely guaranteed 90% of the time, 90% of the time for this to just what? Continue. You get me? Based off the pattern. it's a little bit, and it can make you a lot of profit and also allow you to avoid a lot of unnecessary losses. Anybody want to ask? Yes. Okay.
Yeah, thank you. So, from the setup potential, I want to know if you add positions to your running profits, and if yes, at what point is it good for you to add positions?
For the most part, right? For the most part, if I'm going to do anything at all, I do them in that initial range. You get what I mean? So what I mean is that rather than thinking of even adding positions, right? Let's say I take a trade and then my risk on that position is 5%, right? Then I put a whole 5%. I'd rather put it in, let's say if I'm supposed to put, let's say 10 lots, right? I'll put like 5 of 2 lots. You get what I mean? And then it goes into some 50 pips or 40 pips. I'll close like 2 of them. I have like extra 3 of 2 lots running, right? So rather than you thinking that I'll add position, I'll just keep holding the one down there. You get me? Because now, if I'll add a position at all, right, in a trade, then the market structure must make sense for me to do that, right? Let's say, so don't add a position just based on activity. Let's say we have a structure like this. There's a loop here. It came down, we took a trade here, right? We have our buy here, and the market goes up, right? Trades above this and comes down like this, and then we begin to see some injections here, right? Then by then we can say, oh, perhaps this is a great retest, right? Then square out, add another buy. You get me? But that's an entirely different position. So you see that I have buy here, I have another buy here. I'm sure you've seen me send screenshots like that, but they are all independent setups. It's not as if when this one was just going there and said, buy. You get me? You could just destroy the position here by a small wick. You know, you'd be in good profit here by a small wick, just destroy. This one is one lot, right? Think of what I'm saying. Let's say this one from here to here is 30 pips, right? But from here to here is, let's say, 50 pips, right? And you put one lot here, and you put one lot here. When the market retraces here, instead of 30 pips giving you $300, right? You start seeing negative 200 because you put on another one lot here. You get me? And then if you panic and you don't understand what you are doing, you close the position, and then this one comes up. If you don't even panic and then it hits your stop loss, you also increase your risk. So you don't just add position just because you think the momentum is flowing. You get what I mean? I hope that makes sense.
Okay, I just wanted to help my brother solve his question.
Yes.
About him having a trusted analysis and then the market goes against him. And this was actually my deepest problem. I said, oh, I've learned all the things I need to make profit. But when I take the trade, the market goes against me. Why is this so? Because I trust my analysis. I've learned that the market is not based on your trust or your analysis. This is something nobody has control over. The market will always do what it will do. But you have to do your analysis and what you can do and leave the rest for the market to play out. So when you are done with the analysis, just go in, take your trade with your risk management, and then you step aside and watch the market play out. Then you will have a confidence, then you will have a free mindset, and then you wouldn't be too emotional about the trade, whether it goes against you or you have a trade play out in your way. Thank you.
Thank you for your contribution. Any more questions?
I want to ask about the marking of the swing high and the swing low.
Yes.
Will you mark it on the wick or
The wick. Specifically on the wick. It's very important. What that does is that it allows you to escape a lot of manipulations, right? Now, so many traders would consider a support range or liquidity range or resistance is a range and it's not a point. You get what I mean? For you to avoid manipulation and unnecessary stop hunting, right? Forget about it being a range. Range means that you find traders, right? You find traders who will just like mark. You find traders who just mark something like this, right? By their own standards, something I don't even know, and say, once the market is in this range, I'm selling. You get what I mean? Once the market is it's just here, so whatever they see here, then they are selling and they're putting their stop loss above. You know, I've been a victim of this type of perspective way back, probably 2017 or 18, but the more you grow in the market, the more you refine, you get me, and the refinement comes with just like being exact, being precise, right? This is where precision comes in. Precision means that you're waiting for the market to indeed come there, tap there, react there, give you the information you're looking for, exclude all the notification, then the confirmation is right, then you enter. Again, so based on the not the body or the range, right?
Hi, from the US oil chart, where you did the backtesting on the double
Yes.
bottom.
Yes.
You see that zone you marked around
Yeah.
72. You
Yeah.
see the point just above it?
Here,
No, to your right. Or
here,
yes, that's it.
yeah.
Can it be considered a swing point? Okay,
So if it comes to swing points, right? Based on the way I look at the market, I look at swing points from the 4 hour, and specifically I can draw swing points like this. I repeat, the last high and last low of the extreme moves, right? So in a move like this, I consider this as a swing, and then swing here. You get it? It must be significant enough. It must be significant. You get it? Significance means that it's evident. And then, like, if we are a cult, right? Cult means that if we're a group of traders who are looking at things from the same perspective, we say this is our strategy, right? Then there must be uniformity, true of us. And this person cannot say, how was this move why? But so to eliminate all of those confusions and stuff, that's why I just look at the swing point from this angle, you get it? And then it has just been consistently working for us. Yeah.
Hello.
Yes.
Please, I want to know more about liquidity sweeps or liquidity graphs, because sometimes I enter the market, realize they go and tag me and they turn and look out and others are making money.
so others are making money.
Yeah, the person asked about liquidity, I'll just show you. It's nothing scary. It's nothing out of the blue. Look at a scenario like this, right? Imagine that you're seeing the market like this, right? And then you don't have the perspective of liquidity, perspective of candlestick, perspective of whatever it is. And then this market just let's say comes here like this, right? Or perhaps even here like this. And you're just saying like, oh, this market has just fulfilled a previous resistance range. So let me do what? Let me sell, right? And put my stop loss just above, right? And then expecting the market to reverse. Now you may not be entirely wrong with that, but with such a situation, the concept of liquidity, right? It's not prevalent in how I trade, but I explain it based on the fact that I have the knowledge. It's more like assuming that. So I always say that the concept of liquidity is a pessimistic concept than optimistic, right? Pessimism means that it always has a negative connotation around it, in the sense that it's just assuming that what traders have their stop loss above the previous high, right? Based on the concept that we all trade, okay, demand, supply, support, resistance, order block, whatever it is. So where would you normally put your stop? It's not above the previous high when you take a trade, right? So it's like stops are there. Liquidity is another word for money in the market, right? It's just another word for what? Money. Are you guys with me? So money being there means that when market makers, when institutions are trading around that region, they know that so many traders have just like stacked their stop losses above that range. You get me? Expecting the market to make a reversal. And that's the perfect time for you to see a formation like this, where just one candle will just run up there, take whatever it wants to do before perhaps like, you know what, we have like that final push down, right? So once you start mastering the patterns and then you're seeing, let's say, a shooting star, but like it was a long way that run above your range before it comes down, right? Not only are you considering it as a shooting star, but you just know that that way was that for other traders, that liquidity graph. I don't know if you get what I mean. That way ran through whatever stops presumably are there. You and I cannot evidently know and tell how many stops were there. You get what I mean? Some people just say, like, yes, I know that they've been taking stop loss all over the place. I don't get subscribed to that because, like, there's no, for me, vivid evidence for me and you to say, okay, yes, there were thousands of them. You can only just, like, accept it as concept. The person that say would have, like, you know, some level of evidence backing that would be Mr. Terrence was working with the institutions, but apart from that, anybody that's just parading that, for the most part, is just taking it from that concept of assuming that most traders will have their stop above, and then you just run the stop before you reverse. I hope the person that has the liquidity, you get me. So replace liquidity with money. You get me? Any question?
For the user question. My question is observing your entry criteria, I could see that most of the time we are trying to spot the reversals at the key support and resistance level. So I want to ask, what happened to breakout trading? How do we identify real breakouts and the false breakouts?
So breakout is an entirely different entry perspective. You get what I mean? So it does not form part of my desired entry criteria. You get me? Now, what you ask is a very important question, though it may seem just ordinary. Because remember that when I listed my entry criteria, I said what? Behave like a machine for success in the market. So if you are a trader who believes so much in breakout because you've seen it occur over and over, you feel like you have an edge over it, then you add it. I don't know if you get what I mean. But for me, I don't subscribe to that entry criteria or entry perspective, right? For me, my concept is built on sniper entry, which has a logic of entering the market at the very inception before a swing point. And for a breakout, a swing point has already begun. In a scenario like this, let's say we put this one here, right? And all things being equal, we have this market go up, come down, go up, and then perhaps come back to retest this, right? And then you're trying to look for a breakout, right? You're trying to look for the market reversing. Remember that what? It had already started moving from here through. And then now, you're just joining the party around here based off that breakout. But before you enter that breakout, I'm sure I have like one more position just casually playing here. I don't know if you get what I mean. Can you see the picture? So for me, right when I chase breakout, I chase the inception of the move before that breakout. Okay. Nonetheless, doesn't mean that when some breakouts are very sumptuous, right, you let them slide. Now I'm just being very rigid with the way I'm teaching you because I want to build characters among you. Character means that being disciplined with the way you look at the market and your concept. If you look at the setup like gold, right? This is a perfect breakout scenario, right? If you watch here, right, the most eminent high that gold created was this level right here. Now if you watch here, this was like that last candle before gold broke its all-time high. You get what I mean? That last candle before gold broke its all-time high. If you watch this, how are you now going to approach this, right? In a scenario like this where this is like the all-time high gold has ever traded, this is where personally I would employ multi-time frame analysis, right? You have to have the 2-hour open, have the 15-minute, have extra open, because at that point you want to strictly investigate how the market would react here from candle to candle. If you watch this, right, that's the next candle, because the least chance you wait for a big candle or whatever it is, it's a breakout. It will just run with 100 pips, 200 pips, and then you totally miss that, right? And then if you make a mistake as well, you could just get double weight, you know, and then the market will just go in a direction it's looking for. So trading breakout personally is a very tricky situation for me, you know, like, so it does not always form part of my core entry principle. If it's a casual day, day trading, I've seen some candle patterns, it makes sense. I want to just like, you know, and then especially with a glaring rejection like this for gold, right, where we can clearly see that what is just like reverse 1, 2, 3, 4, 5, 6, and then the 7th time just coming back high in that same range, then you can potentially anticipate a breakout. But for me to answer your question directly, it does not form like a core part of my entry criteria. There are certain scenarios, right? There are certain scenarios that are trading the market which will somehow look as if I'm trading a breakout, right? But I call it the part of least resistance. I'll show you a typical example. So my time for wrapping up is almost close, but I'll just share with you a few key principles or key examples from specifically relating to the question that he asked. Right. This is a typical example. So let's say, right, let's say based on what I showed you, right, you are looking at, let's say NZUSD, right? And then NZUSD, we are targeting the market to come to these highs, right? Here, right? And then we are saying that, okay, when the market gets here, let's see the candle confirmations or formation that's going to happen there. The market comes there, it's playing around, you know, whether it's going to give us a confirmation or not, we just have to observe the pattern there and we ask ourselves, are the bulls present at the best strongly in this region, right? Now, if you have a scenario like this, right, you can see that what clearly we didn't fall for the best trap, you get me? Because we are waiting, taking our time to see the candle patterns. Now, if I have a situation like this where instead of anticipating the best to form the reversal formation and the candle pattern that we know, and then suddenly we have like a huge bullish candle like this, right? Then I know that, okay, if this level did not hold, then the most immediate one that will potentially hold will be within these regions, right? Because they are very close. And then this one right here. You agree with me? Yeah. It means that the market is making its way towards these ones, isn't it? Yeah. Then that will be when, instead of just casually anticipating that the market should come into these levels before I potentially wait for the trade, because that will be where I'm catching a swing point, right? I could casually just like put a few positions, right, around here with my stop loss just below that candle. That was a confirmation. Are you with me? Yeah. And then wait for this one to just like rally hit that level before I start anticipating what a reversal from this region, right? If I fall for it, like depending on the confirmation, this is a typical scenario where our trade setup will look legit, but I'll take a stop loss, right, based on what I'm looking at here. You get me? Yeah. You find that, okay, you had a confirmation, everything is looking clean, you put a stop loss there, and then it just didn't play out. I agree.
Yeah.
But that is a scenario where I'll trade like a breakout or change the market in a direction. When it's like really evidently close that
Seeing something like that, I just want you to.
yes. A lot of times. I don't know if you have a situation like that even currently playing that. But yes, I get what you mean. Like
Once I break it.
let's say you had the market swing low like this, right? And then it's just reversing like this. You plot your Fibonacci from here to here. You have, let's say, 61.8 within this range, right? The market gets there, and then
I don't like
something, and then you're like, this is not the confirmation that you're looking for, right? And then you're also thinking that could it just continue to this level here and then become like a resistance for a potential short, right? For here, all I can just say is that mastering the candlestick confirmation is your only solution. You get it, mastering, and then by mastering, that is where the question that he was asking came in. Taking real intense look into the wicks and then understanding like the perspective in terms of who is really in control here. We have the cleanest of closures that we are looking for. Because in the wicks and all of those things play around there, then you should have a little bit of doubt. But if you have like a clean, okay, rejections and then solid closures at the bottom, sealed at the bottom, solid closures like let's say you have like if you're talking about evening star, you have like that one, and then it comes and then it really closes so flat like that, you get me? And then there's like a clear wick up there like that. These are like instances where you see that within the next candle, we are just going to continue on what. When you see a situation where you have like the candle like that, and then it came down, and then suddenly there's like a wick up there like that, but it's looking like this, right? Then you can begin to you get what I mean. So you have to develop that eye for those ones.
Yeah, Kojo, thank you
Yes.
so much for this session. And I like the fact that you are using the H4 for the confirmation.
Yes.
And then I also like the fact that you are doing with Exness.
Yes.
Because what I've realized is that you are using trading view for analysis, and however, you are trading on Exness. The H4 candlesticks on trading view is different from that of Exness. Because on your charts, the candles close at 6 o'clock a.m. or it's Exness, it closes at 8 o'clock a.m.
Right.
And so now when you identify your level, you see the candlestick combinations of ESG. Maybe you see the morning star, the two hours, and everything. But then those patterns are not Exness. What do you do? Do you trust Exness?
Truth of the matter is that they will all form the same, not exactly the same, some signals in the same category that I've shared with you. What I mean is that, let's say, I get your question very well, right? But let's say, do you guys understand this question you asked? Yes. Let's say you have trading view, and then let's say you are watching the market from a resistance like this, and then trading view printed some shooting star, and then suddenly you just printed some evening star like this, right? Right? And then you're thinking, okay, this is trading view, take confirmation for yourself, right? And you come on Exness platform, right? Trust me, you see something like a tweezer pose, right? You see something like a tweezer pose, and perhaps let's see what again perhaps a shooting star. I don't know if you know what I mean. The formations will be different, right? But the candlestick implications is the same. I don't know if you get what I mean. So if you observe this and then you are confused, just take your time, back test, right? And consider them around the pattern that I've taught you, and you see that they don't speak different language. Now, in instances where they speak different language, extreme different language, then that becomes your edge. You get me? In an instance where trading view close like this, right? I with me. But you have two more hours for Exness to close. And suddenly, let's say that candle which is supposed to like be like that one that will put you in profit here. Suddenly on Exness came to close like this, right? I used to go to enter the trade. No, because by then here will still be trading, but it will just be floating candle which has not closed yet. But here it has suddenly what? Closed. So that is also part of the edge, you know. In fact, the things to share is a lot. This session will not permit us to cover everything. You see, I've tried my best to just share as much information, but if we had extra time, we could do this for about 12 hours and we'll not end. So people should tell Exness to organize this again so that we can delve more into it. But I hope like this one gives you like or answers the question on it. And it's a very good observation. What you just said is very good. I use that often. You know, when I watch this, I'm watching because at the end of the day, you're not going to take the entry here. You take it on Exness, right? And you still have a good knowledge of all the patterns. So if it's telling you something different than what you know, there's no point in taking that trade. You get me? Yeah, I do use that, so it's a very good way or good question to ask. Yes.
Thank you so much. Kojo, sometimes I think that sometimes too many things make sense on the market, and so you begin to get confused because sometimes maybe you'll be seeing a trend, and then you want to know what market is about to do, and maybe you use your feet tool from one point to the other. It's telling you, okay, it retraces to this point, and then possibly it goes that way, or market has been testing a particular zone so many times, and then it's like you take it from here, it gives you a particular thing that it may go this way. You take from another end to, it's making sense, and so it makes it a bit confusing. But one thing I would want you to please make it clear is, in establishing your swing points, in terms of swing lows and swing high, do you consider a point to be a swing low or a swing high just by virtue of another swing breaking that? In terms of bullish trend, do you consider a previous swing high just by virtue of another one breaking it? Or sometimes maybe there's a swing, it retraces to 23 or 38, and then it continues to break that point. But then I begin to think it's one swing because we didn't have a full retracement to maybe 61, or you know, and so I begin to consider that as a continuation of the previous swing, and so I'm expecting the next retracement to come to 61, which may be like 100% retracement for the next one, and then it doesn't, and so I begin to.
And then the 23 one will rather continue.
Yeah, so yeah, the 23 one or to 38 left another one which broke that high to create another swing high, and so I would take that to be one swing.
Yes.
Although the previous high has been broken, I take it to be one swing. Does it work?
That's what I do.
So on gold,
that's
why I was a bit optimistic of the sales, because because you yes.
I mean, I knew to buy.
So from that
I knew good
low.
Yeah, the swing low. Yeah, I knew all this one. I knew good, of course.
From here?
No, down.
Yes.
Down. The next one. Yes. So when it went up, you retraced so no, the first one. So from that point to the first one, it came down. It went at 50, but the candles closed at 38, and then this one went up. Okay, so I took that whole one as one swing, and then was expecting a 61 retracement or something, which it just did another 38 up there, and then you know, so because I took that one swing, I was still thinking that 61 is it. So now I want to know that in establishing your swing point, is it just by virtue of the previous high being broken? You should just take it as a swing high.
In fact, like, your question is very valid, right? In a very complex one, all of us always wrap our head around it, right? I can't tell you that even me, like, I'm a master over this logic that you're asking. Sometimes I think that's very tricky and if you see the situation of considering that, do I consider this as like that whole one move, right? Or I consider this just this tiny movement here, right? As a swing. You get me? But that is where this one comes in. So for me, right, before I even start considering the use of Fibonacci, right, certain principles must follow for me. Let's consider this to be 0, right, and let's consider this to be 100, right? Which means that midpoint here will be somewhere around 50, right? You agree with me? Somewhere here will be 25, right? And then somewhere here will be 70, let's say 75, right? Now let me use the opposite direction. Let's say we have the market come down like this, right? And then it hits like that 0 level, right? In expectation of a retracement before a continuation. The market just comes here like this, right? And then all this being equal continue, right? It's just continuing the trend for me. It comes here and continue. It just continues. It comes here and unless it supersedes the 25% for me, right? Before I will start anticipating what? That retracement. So the 25 becomes a key confirmation for me to say, okay, we have like a deep pullback and potentially a continuation before we just consider this as what? A swing point, retracement, and continuation. But anything below this region, I just see it as just a continuation within that range. So you could use that as a good perspective to judge this one. You get me? Look at it, see if it traded or superseded the 25% region, and then it will now inform you that it's coming towards this one. Doesn't mean that 25% makes it a retracement. It will now inform you. I will not even put a flip to if we've not had at least that 25 reversal. You get me? Before I will now consider that, okay, I cannot consider. Let's say it goes all the way here, right? And then it continues. Then I cannot consider from here to here as a swing point. You get me? Now I have to give a reasonable consideration to this point. So hopefully it got you in I hope it answers something.
Okay. Yeah. Thank you. Mostly it talks about how you were able to learn the technical aspect of trading. So I want to know what are the materials or the process or the things you did to build your psychology.
I think that everything we've said here has psychology already embedded in it. Trust me, sometimes trading psychology must not be saying, I write psychology before you pay attention. Me talking about the aspect of understanding that if you have $5,000 account and then you are risking $500, consider it as a loss. It's the biggest part of psychology you understand in trading. I don't know if you get what I mean. Me talking about the fact that if you are in stop loss in pips equal in take profit, put your stop loss at break even is also the second biggest psychology. Me talking about the fact that if the market moves in a considerable favor, let's say your take profit is 100 pips, but the market is floating at 50 or 60 pips, take some partial profit away and leave the rest to run. It's another crazy part of psychology. So trading psychology is not just about thinking that, if I trade you say, means that. Help me to sleep and all of those type of things. You get me? The moment you start managing your trade accordingly, based on like the most easiest approach, you are literally solving the psychological problem. You get what I mean? So I always tell people that it's a very hard take for me, but I always believe that trading psychology doesn't exist in my books because risk management solves psychology. In fact, if you challenge that, bring any psychological trauma you may have in the market, and let's see if you don't relate it equal to risk management. I don't know if you get what I mean. Yes. What are you suffering from that is not related to risk management? And you say, no, Kojo, this one is strictly trading psychology. You give me an example. You cannot hold trade. You cannot hold trade because maybe instead of risking 2%, you are risking 50%. It's putting in and you are thinking, hey, if you hit stop loss, my $2,000 is remaining $1,000. It's hard. Trading psychology is hard. No. If you risk 5%, you would have had maybe a peace of mind. You get what I mean? So it's all embedded in risk management. Trust me, you can give it a proper thought, and you see that psychology is not that of a big deal in trading. You get what I mean? Anybody? Yeah.
Bro, Alvin.
Yes.
Nice. So you still refer to yourself as the emperor of the blues.
You have another title. You have another title to give me.
Nice. But then the question I'm asking is that how has that impacted your psychology and your mindset with regard to trading?
Oh, you know, his question may look at he hasn't done, but it's good. You know, trust me.
Yeah, because I know that identity works very well with this thing.
It does.
If you don't have an identity in trading, you are not getting anywhere.
Number one, if you call yourself emperor of blues, what must you do? Live up to what? It. And how do you live up to it? Constantly building yourself, learning, staying updated, making sure that. Imagine that, okay, I'm trading and then I'm having like 5 continuous loss, 10, 15. If I come and write on Twitter, emperor of blue, you say? So I'm constantly going to build myself like, no, I don't want anybody to come and write or trash talk me or something. You get me? So yes, this question is very valid. You cannot downplay it, you know, because I understand where he is coming from. Any yeah. Do I blow account? That's a very complex way to put it. But yes, there are times where I lose account. You get me? But I don't necessarily call it blowing account because what I put up in that account, right, is like my stop loss. I don't know if you get it. Like you see me flipping the CDs, I think 20,000 to 40,000, this and this, right? That 20,000, one of it was on the risk. But that's because it's me. You get what I mean? But let's say I have like, let's say 100,000, right? And instead of risking, let's say 20% from 100,000, which is like something I want to do because I can afford to, rather than keeping that 100,000 and pulling stop loss off whatever that will equate to the 20,000, I would rather create a new account and drop that 20,000 in there and then take that position and then forget about it. So in that sense, yes, there are times where it goes wrong. Just I hope you get it. Yeah, but I will not say that I have like a whole equity or balance of let's say 100,000. I'm trading and 10,000, 20,000, 30 before I finish 100. No, nothing. How do you get it? Yeah.
Mr. Kojo,
Yeah.
You are known for the pound first for the most part.
Yes.
Why? Is there any sort of fundamental to it? Maybe seasonal tendencies or something?
It was seasonal tendencies came as a result of the initial upgrade, but the very first part of it was I built my big account back in the days from pound. That was like 2017. My big account then was relative, but for me it was a big account. And I was paying, and I was like, I have to master this. And it was GBP USD though, And so out of pain, I was like, I'll give it more focus and understand why, and then injection reason. But out of pain, you get what I mean? So let's say gold blew your account, and like, I'll teach you a lesson. Start managing and analyzing gold and loan, and then suddenly you get your hands on it, and then it just becomes your game.
I want to find out, have you traded with any broker before? And clearly, you mentioned about the risk and then having a stop loss which you can easily let it go. I think that is the same trend the bot firms are using. Even though you might want to buy or you have bought, let's say, a $10,000 account, then they will tell you that within a day you are not supposed to use $500. Meaning that eventually, a day they are giving you $500 to trade with. So I think what Kojo is saying is very factual. That we should be able to, be more like think like a machine, and then trade that line.
You see, Profile is just like a regulated risk management tool. Forget about the fact that the company is running their business and all of those things, but the mechanism in place is absolutely covering risk management. You get me? Now, you losing your account in the Profile is just a punishment for not just following or obeying rules, right? And apart from the initial aspect being punishment, the second bit of it being that you have not been employed skills well. When I say punishment, what I mean is that let's say you have 10% drawdown, right? And today you raise 1%, tomorrow you raise 2%, you lost 3%, 4%, and then suddenly 9% and 10%. You were trading under proper management, but your trades were not just going well, right? And then you lost it. And then you say, okay, I'm not that good, let me go polish my skills, right? But imagine a trader who's really that good, right? But instead of risking that 1%, 2%, they just risk 10% on one trade and then boom. You are then being punished for that. You get what I mean? So now remember that in that instance, it's not your own account, it's somebody's own account. So it just cancels out, like I said, being punished for not following the rule. But if it's your own account and you're doing that, then it means that you are just deteriorating your own account. So it just so embodies the risk management that I'm talking about, which is still reflective of the trading psychology. So you're not in the wrong. But asking a question about why trader profit, yes, I did. Back in 2018, or 19, my memory serves me around, I did. I think then the only profit that was prevalent then was traded FTM, right? So I had a fair deal on FTM. I was part of the very first people who made FTM and perhaps even the trading industry change logic around the rules, which was like drawdown, right? First was not drawdown. It said do not make a stop, and do not make a loss above 10% in a day, right? But you know there's a difference between loss and drawdown. Loss is when the trade is closed, right? So I took a trade on Euro JPY, I went in a drawdown above that range, and then came a huge profit that made me back, and I was failed. And I held them on that. Look, the rule said stop. Not drawdown, you get me? Drawdown is floating from the wall. So it was not so long and then they changed that. But yeah, that's like back in the days. Back in the days. So yes, I've had my own fair share in that. Any more? They said what? Two questions, right? Is there two questions?
Before your prime time.
Yes.
So before your prime time, what motivated you to continue trading?
I just knew that trading could fulfill all the things that I was looking for, that I did not see any job fulfilling for me, you know. And I think this comes from a personal ambition point, and that's something that, truth be told, a lot of Ghanaian youths lack, you know. And then those who even have it, they are not able to voice it enough. We live in a society where people are so suppressed to not want to talk about wealth and growth and building, you know. But maybe my early orientation associated with people abroad and all of those things, you know, gave me that free will to just be excited to grow and then enjoy it, you know, not in the old age but at the youthful age. And mind you, my experience in the corporate world was very intense. You know, I worked with people who are working in, you know, the top organizations in the world, and then they were making reasonable income, you know, to our standard of living, right? Like if in 20, and I always used to do this math, and these are things that back in the days and all the time I've shared on Instagram Live for a long time. If in 2020, I did my national service in NPA in 2016, right? I was awarded 1-year contract for 2017 and then ended up from that place from 2018, and then just went full time between 2017 and 2018 into trading. This was also the same period where I endeavored in the military. Now, around this era, right, the person that I worked immediately about was receiving about 8,000, give or take 8,000 cedis a month, right? This is in 2017. It's like a big money, you get me? And 2024, how much would you perceive the increase to be? If it's even like 5% per year, right? From 2017 to now, then it's probably receiving like, let's say, give or take 15,000, right? Or I'm wrong. Is it too much or too less? It's okay, right? 15,000. 15,000 is about, you know, the norm. You get me? You're receiving a salary of 15,000. It's a lot, right? But now, let's assume that, right? Let's assume that it's 15,000 times 12, right? That person did not touch that salary, right? For the whole year. Then they're making what? 180,000, true or false? And then let's just divide that same thing by 16, right? That's what 11,000 what 250 or something, right? And reality check, who can just receive salary without touching it for the whole year, right? It's not true, right? So it means that every day, how much do you think the person will be able to save from here? You tell me. 10%, 5, 20, what? 20%. Saving 20%, we are talking about 15,000 times 20%, right? That's 3,000, right? 3,000. Now, 3,000 times 12 again. That means the whole year the person saved what? 30 what? 6,000, right? Now, if your dream car is even a Mercedes C250, C300, go and Google the price. How much does it cost? 400,000. Or what? 400,000. 4 billion. Divide that 400,000 by this and see when it will take off. So, like, I understood these things very early. You get me? Personally, I understood this. I'm like, the mass is no mass. You know, so I had to take a different route. And I also knew that when it comes to trading, the risk is obviously there, but the potential is enormous. So it will be very reasonable for me to just hide in my corner, hone my skills, and when I'm ready, the world will know about me. So, like, from that 2016, 17, 18, I think the only time people really started getting to know me was like 2020, then, but I don't know that within that 16 to 20, I was really like hiding and molding myself. Imagine how many years that's 4 years, right? But all those 4 years, the things that I'm teaching you was not presented to me on the silver platter. I had to learn and observe them myself. So now if you're here and then these tricks have been shared with me, giving my detailed calculations and everything, then you just have to go home and test it and find things and perhaps add 1 or 2 by your own self and give yourself 1 year or even maximum 2 years and become whoever you want to be. Is that not a risk worth taking? Yeah. So that's just what it is. You get what I mean? That should be all.
You advise that a person starts growing an account roughly from $50 to $500 before the person starts receiving taking profit, or the person saves the money to about $7,000, equivalent to the $500 before the person invests it into the account and begins to trade with it.
The reality is that if you take $50 to $500, you are a superhuman in the market. People underestimate that. People downplay that. Taking $50 to $500, you are doing something insane. Trust me. You know, we always downplay because it's like, but watch it in proportion, right? Now, what is the percentage? $50 to $500 is more than 5,000% increase, right? Now imagine it's $5,000 and multiply by 5,000%. How much are we talking about? It's not like 50,000 or imagine. One time, I'll go to few. You get me? So what I'll say is that, or maybe I'm not answering your question correctly. No, you see, right? Okay, I know your question. But you see, there's one thing that I'll really tell you. With this question of asking $50 and to right? There's one thing that I say that what is there to lose when you are already losing? Have you heard me say that before? $50, no, and go shoot cry. You get me? $50 will not do much for you in today's economy. So already you are losing, right? Are you with me? Life-wise, generally, let's just take it as if all things being equal. $50, it can't do much. So if you be able to take $50 to 500, then you're doing something superhuman. If even in your bid to trade that $50 and then you risk it, trust me, there's not much to cry about. I don't know if you know what I mean. I'd rather risk putting my skills and taking that risk which you're talking about to grow at $50 to 500, right? And then what you even lose, then keep that $50 and spend it, and then it's done. You get what I mean? So all in all, hopefully maybe it just answers your question. Like there's no regret to doing that. But yes, if I were you and I had only $10 or $50, I'd look for a way to grow it into a substantial amount. You get it? Yeah. So if that is all, I think that I'll bring my presentation to an end. Thank you guys so much for listening. Definitely want to see us have a session like this again. And I encourage Exness to continuously do this, so that we explore more options, because trust me, we did not even talk about fundamentals. We did not talk about so many things, but we've learned a lot indeed. We would appreciate that. But we pray and hope that Mr. Chibuzo, you in your good office organize a lot more like this for us. Right? We would appreciate it. Thank you very much.
You guys are clapping, you guys are excited. Like I said earlier, I realized that a lot of people are interested in the business, but what seems to be lacking is confidence. And I'm hoping that what he has taught today, you guys are going to you guys are actually applying to the market. You guys learned anything today?
Yes, sir.
You learned anything today? I think you guys are done with questions and answers, right? You still have questions? You guys are satisfied, right? Fully loaded.
Yes.
For now.
For now.
So I think we come to the end of the program. As you make your way, we have just some packages for you guys. What's your breakfast? Just take that on your way. Obviously, people ask where's item 7? Item 7 is just on the way up. Thank you for coming.